10 a.m. in Lagos, Nigeria. Good morning and welcome to Business Morning on Channels Television. I'm Imi John Mekwa. Thank you so much for joining us. Well, the president of the Abuja Chamber of Commerce and Industry, Dr. Al-Mujataba Abubakar, has identified partnership with the private sector as a sure way of improving Nigeria's economic ranking in Africa. He was speaking at a meeting in the Federal Capital Territory. He highlighted the role of export mobilization as Nigeria faces a depreciating export era with a high import level. He calls on the federal government to summon agencies in the export sector to enforce the single desk clearance for exporters to ease the business environment.
Our chamber has emerged as a strong voice of the private sector that presents policy support to government to resolve many national business challenges. For Nigeria to benefit from the Africa trade and retain her position as the biggest economy on the continent, we must continue to work to improve our records on ease of doing business. In addition to the action plan already created by the National Africa Trade Committee, a deliberate emergency action must be taken to ease export process, ensure a single export clearing desk for exporters, emphasize on regulators to become facilitators, and declare export facilitation as a national emergency. As a nation facing low export and high import and facing stiff competition from over 50 countries under the Africa trade, we must take export mobilization as an emergency.
Yeah, welcome back. Well, leading us into a commodities market conversation this morning. Let's see what's happening in the oil prices space. And we see that prices climbed today, hitting their highest levels in at least 3 years, extending gains triggered during the previous session after the world's major oil producers announced that they had decided to keep a cap on crude supplies. Brent crude was up 40 cents to $81.66 a barrel, while U.S. West Texas Intermediate oil rose 30 cents to $77.92 after gaining 2.3% the previous session. OPEC Plus has decided to maintain an agreement to increase oil production only gradually, ignoring calls from the United States and India to boost output as the world economy recovers. Oil prices have already surged more than 50% this year, and that's a rise that has added to inflationary pressures that crude-consuming nations are concerned will derail recovery from the pandemic. Well, how does this affect Nigeria, seeing that Nigeria's major source of imports of foreign reserve is in the oil sector? We have Dumi B, analyst with Financial Derivatives Company, talking to us on that. Good to have you, Dumi B. Good morning.
Good morning.
Yeah, so I mean, it's should we say it's time to celebrate, or should we say it's time to have deep thinking with this increase in oil prices?
I mean, it's a double-edged sword. So there is reason to be excited as oil prices are higher now, and that's because that could boost Nigeria's export earnings. But the downside is that oil production hasn't significantly increased. Nigeria's oil production as of August fell to about 1.27 million barrels per day, despite the fact that OPEC has, increased output, even though not substantially,
not fully, yeah.
But I mean, there is, the OPEC quota has been eased for Nigeria. Nigeria now should be able to produce up to about 1.8 million barrels per day, but we're producing about 1.27, and that's due to supply disruptions and vandalism that's really hurting Nigeria's oil supply. And Nigeria is more sensitive to changes in oil production than prices, meaning that despite the fact that oil prices are higher, Nigeria's oil revenue or export earnings could still be low because of lower oil production.
So why are we cheating ourselves? Because this is like you have an opportunity. I mean, we're talking of our reserves dwindling. We're talking of our, we need more FX inflows. And this is a major source of FX inflow. And yet we're doing less than we are allowed to, at least.
I mean, like I mentioned, it still has to do with the issues affecting Nigeria's oil supply. So not until those issues are addressed before Nigeria's oil production can actually, improve so much so that we'd see a significant boost in oil revenues. But from the standpoint of oil prices, we're also looking at Nigeria's break-even point. Yes, oil prices are 81 dollars per barrel. That's good news. We could see some increase in revenue, but Nigeria's break-even point is about $137 per barrel, meaning that for the economy to really stabilize, if oil production, remains at its current level, we need oil prices to be at least $137.
But this is more than our benchmark from our budget.
Yes,
so we should be counting profit.
I mean, it's more than our benchmark, yes. But at the end of the day, we look at the fact that the economy is experiencing a huge revenue shortfall. We can't always depend on oil revenues. And yes, we might receive some money, but we also need to look at the fact that there are other sources of revenue that are dwindling. Agricultural sector is dwindling. The cocoa exports is declining. So there's a lot of other things that go on to boost government revenue other than just oil. And remember that, yes, we're receiving money from oil, but we also look at the fact that almost 80% of our revenue goes into debt servicing. So right now, we're not only looking at, because when we receive money, how you know an economy is growing or developing is when you receive money and this money is used or pumped into the economy, pumped into capital projects that would spur, investments and spur employment, spur output growth. But that's not the link. The link right now is we receive money that is not exactly sufficient, and we use that to service debt, or we put it into recurrent expenditure.
Yeah, so apart from even the debt, first of all, you still have the subsidy. We're still paying for subsidies.
Exactly,
so,
exactly.
Even though Nigeria cannot maximize, the increase in oil prices, it still increases the subsidy that has to be paid because you're buying at international rates.
Exactly. So that's another angle looking at how this affects Nigeria. So there is also the subsidy payments. Even though the PIA has been, signed and all, the subsidy payments are still existing, and that's because there's still the talks between, the labor unions and the government as to what time would be the right time to actually take off subsidies. And with the fact that we're still paying subsidies, that has also eaten into the FAC allocation. So the NNPC has said that they're going to actually reduce, or they're going to have almost little or no contribution to the FAC's bottom because of subsidy payments. And each time oil prices increase, what this means is that we're going to continue to pay more in terms of subsidy. And if subsidy goes away, we're going to definitely see an increase in the domestic price of a PMS that would also feed into
And to
inflation.
think that the budget for 2022 also has provision for subsidy. One would have thought we would have started preparing ourselves by now, since the talks with the unions are already on, and getting Nigerians prepared for it, and maybe preparing some buffer that would, because we do know, obviously, PMS goes up, then prices go up, food prices go up, transportation goes up. Even crops, everything goes up. One would have thought that we'll start preparing ourselves, because if we are making if you're budgeting for subsidy again for 2022, then when are we going to work on this thing?
I mean, so those are like the concerns that a lot of investors, both domestic and global, have concerning the policy space for Nigeria. There's a lot of ambiguity and unclear approach when it comes to some of these things, and this is because something is said, but the implementation, goes the other way. So this definitely is going to continue to heighten investor pessimism, and investor concerns are going to definitely tilt towards the negative area. And remember that the world is fast transitioning away from fossil fuels.
Exactly.
Yes, currently there is high demand right now, and that's because the global economy is rebounding. We're approaching the winter season, so there's going to continue to be that increase in oil demand, and there's currently that supply deficit. So oil prices could continue to increase, even though we're looking at the fact that the world is transitioning away from oil. We're looking at electric vehicles. So there is that conversation, but definitely Nigeria is still very late to the party. And with all of these things that are happening, investors are going to, still be raising eyebrows towards what is happening in the downstream petroleum sector, because clearly prices are still not yet cost reflective. And for that, for investors to actually pump in funds towards this sector, cost has to be very reflective.
And then, do you see this price hitting to the dream price of Nigeria, the 137?
I mean, not exactly, but Goldman Sachs has, come up with a forecast that oil prices could actually hit $90 per barrel by year end. And with Nigeria's position in terms of like 2021 budget benchmark, which is 40, the new MTF 2022 is about 57, and we have 55, 57 as well for 2022, 2023, 2024. So clearly Nigeria is still in a, was still able to hedge, against possible oil price shocks. And that's because the global economy sees that oil prices could actually maintain this rally, while we are saying $50 per barrel, $57 per barrel. So we're likely going to, still be able to hedge against any possible oil price shocks, which is kind of good. We're going to be able to hedge away from external vulnerabilities, external imbalances coming from that volatility in oil prices. But we can't shy away from the fact that we need to ramp up oil production to actually, sustain the economy in terms of a boost in oil revenue.
So even because, I mean, the OPEC cap is just for, I think, till October. Right, so they might meet again, and then they'll increase by 400,000.
Yeah, they're already doing the $400,000 a barrel. Their meeting in July was when that actually happened, and they've just sustained that increase by 400,000 barrels per day. So the cap actually was, or this gradual increase rather, was to continue until April 2022. So they're just going to keep reviewing the prices, reviewing their production quota relative to the rebound in global economy and with the the demand for fossil fuels and all. So that's just going to continue according to what OPEC Plus has said. So until their next meeting before, would likely see any possible reversal in this stance.
Yeah, because they're not listening so much to the US and India calling for more. Okay, so let's move from oil a little bit. The CBN is planning to add wheat to the list of commodities that will not be able to access FX. What's driving that?
Definitely the fact that they're trying to cut down on Nigeria's food imports bill, and as they are saying, they want to invest in the value chain for wheat production, local production of wheat. So there is that conversation that is happening, but we cannot overlook the fact that this is going to have a significant impact on imported inflation, and in turn other wheat-related products like bread, pasta, biscuits and all. Now, the dynamics of this is this. There is the fact that there is a shortage of forex. Now, some of these companies that use wheat as a raw material for the production of flour and other wheat-related commodities, they source, just about 10% to 20% of their forex needs from the official window. Now, adding them to this import restrictions list will further push them to the autonomous market to source for forex, and this is going to, aggravate demand at the parallel market, and further cause the naira to depreciate at the parallel market. Now, there's that dynamics. Now, we also look at the fact that adding this to the import list means that the CBN and federal government have to intensify efforts like now to boost wheat production in the country.
Well, should the efforts, should the ban come before the efforts or the?
Exactly.
Because, I
mean, so that's where we talk about investor concerns in terms of this somewhat on the spot policies, that just spur up, all of a sudden, and it's still in talks. It's still in talks. The CBN hasn't come out and said they have added it. They are considering this. And I was reading what the CBN said. Now, what the CBN is going to do this intervention in the wheat value chain after it has substantially made progress in rice and maize. Now, if we look at the time lag between when that is going to happen and when we're looking at forex, for these companies sourcing forex. We're looking at when that's going to eventually have an impact on the Nigerian economy, when that's going to have an impact on prices. Because in the short to medium term, we're saying that prices are going to rise. Not until we're seeing a substantial impact or substantial investment in the value chain. And that's not going to happen until after rice and maize. So clearly, there has to be some form of going back to the drawing board to make sure that whatever policies are being made in terms of food, because the local production is affected by, obviously currency pressures, is also affected by insecurity. So not until we're able to address insecurity that is significantly hurting the local production of a lot of these commodities, before we can start having this conversation.
That is even stopping us from maximizing the increase in oil prices in the global space.
Exactly. So yes, Nigeria can produce. And remember that Nigeria actually, the wheat actually that Nigeria produces is not the wheat that is used for bread, pasta. So that's why we import this wheat actually. And they will also look at the fact that there is the demand gap because Nigeria produces, just a little to meet the rising, demand for wheat and wheat-related products. So there's just a lot of things.
You mentioned rice, and it just takes my mind back to when the government was trying to encourage Nigerians to consume Nigerian rice, and not imported. And I'm thinking of all the interventions that the CBN and other government agencies did, and I'm thinking, can we learn from that? Did we see the expected impact from that? Are Nigerians now consuming locally produced rice? Is the price of rice what it ought to be? Because what happens is a lot of people still do the imported rice. You know what I'm saying? So if we didn't do so well with the rice, how do we hope to take that kind of example into the wheat space when we're not even producing the quality that we need to as a raw material for most of these edibles?
I mean, it just brings back the entire conversation about aggressively investing in the agricultural sector. Except we do that and also invest in the quality of these seedlings, invest in the quality of the product itself, ensure that it is produced at a maximum capacity that would actually meet local demand. All of these restrictions, lists and all will just keep having, people will just keep pushing back on it, and it will keep having an unintended, consequence on Nigerian economy. And
drive people more to the black markets and the parallel markets and all that. Okay, well, what else is happening in the commodities market space?
I mean, as usual, we're seeing an increase in, commodity prices. Prices are still relatively high, despite the fact that we had the harvest season.
Is that the insecurity factor?
Of course, yes. So the insecurity factor is also the factor of the exchange rate pass-through to these commodity prices. We saw the price of flour. Flour has increased by about 100% compared to a year ago. Pasta has increased. Pasta that we used to buy for about 150 naira for one, now it's about 350.
Yes.
We're seeing the price of eggs have also increased. So prices of these commodities are still increasing, and that's primarily
in spite of the harvest season.
Exactly, and this is primarily driven by currency pressures and supply chain bottlenecks. And we're also seeing the fact that higher energy costs and logistic costs are also feeding into commodity prices. So that's what's happening currently, and there's all the talk right now for commodity prices is basically surrounding currency pressure, the exchange rate pass-through effect to these commodity prices, and now we're about to add wheat to
and I want to add wheat
to. Exactly.
Well, we'll pray and hope for better days.
Exactly.
Thank you so much, Dumebi Eke, for your analysis this morning, and enjoy the rest of your day.
Thank you. You too.
Okay. So we'll take a break now. After that, we're going to discuss the microeconomic stability, and that will be after the break. Just stay with us. It's Business Morning on Channels Television. You're welcome back. Well, as at the 8th of September 2021, United States dollar assets accounted for the lion's share, about over 72% of Nigeria's external reserve stock, which was at about $36.25 billion. It increased to $36.03 billion on the 13th of September, and that was because of the SDR. We talked a lot about that on this program, where Nigeria got $3.35 billion SDR from the IMF. Foreign exchange required for external debt servicing has also increased, rising from 289.45 million in the fourth quarter of 2020 to 103.41 million in the first quarter of this year. Well, it's no longer news that there's deficits of foreign exchange supply. We noticed that in the disparity of price in the official rate, the I&E window, and the parallel market. Oh, let's get the thoughts of an economist and partner, head of transfer pricing services at Anderson, Nigeria, Dr. Josh Bamford, to tell us what he thinks about this and possibly prefers some possible solution to it. Good to speak with you, Dr. Josh. Good morning.
Good morning, Nini. How are you doing?
I'm great. I'm great. So first of all, let's start from the very bottom and see the importance of foreign exchange market, a foreign exchange rate, and external reserve to the Nigerian economy.
Thank you. I think it's very important that the average Nigerian understands the interplay of the foreign exchange market and how it impacts our daily lives. Ultimately, what we care about as individuals is whether we can have or enjoy a better standard of living. That means, can we work and income or salaries for us to afford basic goods and services, which then improves our welfare, which improves standard of living of the average Nigerian. On the other side is the fact that all these goods and services come with a price tag. So you don't want a situation whereby inflation is allowing the costs of these goods and services to be higher than the rate at which your income or salary increases. So it's important that government manages our ability to get jobs, as well as control the rise of average prices in the form of inflation. So it begs the question: how does the foreign exchange market impact these two important goals? That is, increasing standard of living of the average Nigerian and making sure that cost of living doesn't get out of hand in terms of its rights. Now, the foreign exchange market is very important. The truth of the matter is, if Nigeria was Wakanda in the Marvel comic movie Black Panther, then it would have been a closed economy, and then we don't need a foreign exchange market because we don't trade with the outside world. But the truth of the matter is, in today's world, we do trade with the outside world. For you to trade, you export and you import, right? When we are exporting, we sell our products on the international market and we earn foreign exchange. When we are importing, we need foreign exchange in order to buy foreign products and services. So we then demand foreign exchange in order to purchase these products and import them to Nigeria. So it's the interplay of the supply of this foreign exchange and the demand for this foreign exchange that creates the foreign exchange market. And that creates implications for the price of the foreign exchange, which is the exchange rate. Now, for governments to actually intervene in the market in terms of the supply, we depend on our external reserves or the foreign exchange reserves. So the more external reserves the government has, they are then able to supply more into the market to meet the demand, and therefore is able to then stabilize the price, which is the exchange rate. However, in cases where the supply decreases significantly, all right, and there's excess demand, then it puts upward pressure on the price of foreign exchange, which is the exchange rate, which means that we then need more naira to buy just $1, all right, in order to make these imports. And that's where we then have the problems. And once that happens, businesses that need, foreign exchange for, their raw materials, for the purchase of plant and equipment, see their import costs rise, and they pass it on to the final consumer in terms of higher prices. And sometimes they actually operate at and below capacity and then for layoff workers. So ultimately, when we find ourselves in that kind of situation, it has an adverse impact on standard of living because businesses don't employ as many people. They sometimes lay off workers, and therefore the average standard of living goes down for the average Nigerian. And at the same time, because businesses pass on some of these increased input costs to final consumer, average prices goes up and cost of living goes up. So our misery level then goes up in the form of high unemployment rates and high inflation rates, which is bad for the economy. So that's basically the interplay between foreign exchange market, the exchange rate, external reserves, and how it impacts the average Nigerian in terms of the macroeconomy.
But they obviously have impacts on everybody's daily living. But trying to find, I mean, a lot of people have spoken on this, but from your perspective now, this negative net inflow of foreign exchange that we have in the country, would you say it's from the supply side or from the pricing side?
So clearly, government has control over the supply side, and the supply side is made up of different factors. The most important is, our trade balance, right? Our ability to export more. But we know that Nigeria has a peculiar problem. Our exports revenue is highly dependent on the export of crude oil. So what then happens is that with crude oil exports generating around 70% of our, foreign exchange, earnings, anytime there's any exogenous shock on that particular sector, that adversely impacts our crude oil export revenues. That will then lead to these, negative, inflows. So that is a major problem. And we know that government is trying to diversify the economy so that we have other sources of exports beside crude. Other sources of foreign exchange supply inflows would include remittances. So we've seen CBN trying to be creative and trying to create an incentive for our family members who are in the diaspora and friends who are in the diaspora, try to send remittances through the banks through a more official channel, and then let the local person earn a little bit more naira. So there are creative ways of trying to ensure that the supply side actually improves to meet the demand. But all cannot be on the supply side. They also want to think about the demand side, and that's the reason why some of the policies, such as excluding a list of items or products that can access forex through the official channels, so that they can curtail the demand and force people, to actually demand, locally manufactured products of such items that have been unlisted. So these are some of the factors. So it cannot, it's a supply side issue, but there's also a demand side issue that the Central Bank of Nigeria is trying to manage, whereby the demand side also is curtailed a little bit, and the demand for forex is used for more productive ventures, as opposed to things that we can actually produce locally, but people want to just do, demand forex and import them for their own personal use when we can actually access locally produced versions of that. So it's mainly a supply side factor, but there's also a demand side factor, which then impacts the exchange rate, which is the price of forex.
So would you say it's the taste of Nigerians, or would you say it's the availability, of the quality alternative to this imported goods?
So the truth of the matter is, the first question is, do we have enough of these products in the market? So you can make an argument that there are some products that we have no business importing, all right? But the first question is, if you are not going to be importing those products, do you have them in the right amount of quantities to meet the demand, the local demands in Nigeria? And the second question is, does it meet the same level of quality compared to what would have been imported? Because those are two different issues, because quality also impacts demand. As long as the locally manufactured versions are not of the same quality, there's still going to be a demand for the imported versions. And if there's going to be a demand for those imported versions of those products, and those products, the importers are not getting access to forex through the official channels, then definitely they're going to feed the power market, where you're going to have upward pressures on the exchange rate and the power market. And that also creates a problem of inflation, because that means the cost of those products being imported are going to be higher than it should be, and therefore it's going to be passed on to the final consumer. So I think the policy should be such a way that we need to really assess whether do we have enough of such products, locally manufactured or locally available in the market to meet demand locally, and do they meet the quality standards compared to what would have been imported? And if both questions are yes, then clearly it makes sense for us to actually demand such locally manufactured or produced products, as opposed to importing them. That puts undue pressure on the forex, and therefore makes the exchange rate, actually depreciate, and that can hurt the economy.
So where, from your view, do you think we should start solving this problem? Both of the taste, since you said is yes to both, the taste of Nigerians, and, making more quality. We have Standards Organization of Nigeria. I think it is their job. When it comes to edibles, we have NAFDAC. These are the agencies that are supposed to ensure that we have quality products in the country. So we have them. So what's stopping us from getting these quality products and services?
So clearly, that is the demand side. And the truth of the matter is there's this argument that you cannot really force some of this stuff. Some of these things can be culturally motivated. It's called, you use a process of moral suasion rather than forcing people to just consume locally manufactured products, because sometimes it can be a mindset issue. So as long as, our locally manufactured products meet the high standards that, the market is demanding, all right, and we have all these agencies and boards ensuring that we have high quality of such products. And to the extent that they are as good as products that can even be exported, then we'll have a gradual shift away from, excess demand of imported goods that actually we could produce locally. So that would be very helpful, because if in my mind, these products are so good that they can even be exported, then why wouldn't I, demand, a locally manufactured product of such? So I think it's going to be a gradual process of us, making sure that we find locally manufactured products attractive. They meet the high quality standards, so that it's not all the case that we need to be demanding imported products just because in our minds they are usually of high quality. And the fact that it's a foreign product, that means automatically it's of high quality than the locally manufactured.
Okay, well, looking at another factor now, how much of a challenge is capital flights to the management of foreign exchange in the country, and what implication has it had so far?
So as I said initially, the major source of supply of Forex clearly is the export of, tangible products and services where we get these Forex. But there are others that also play a role. We've talked about remittances. The third element will be, capital inflows. And capital inflows can come in different forms. You could have foreign investors, participating in our stock market, and bringing in, foreign exchange into the market. It could be foreign investors, dabbling in our bonds market because they see the interest rates on, let's say, U.S. Treasury and Nigerian Treasury bills on the high side. And so they decide to make investments by purchasing such U.S. and Nigerian Treasury bills. Or it could be in the form of foreign direct investments where they come in and establish businesses in the real sector that creates actual jobs, but there's some injection of foreign reserves into the market. But what is very dangerous is the type of, capital inflow, right? When it's in the form of, participation in the bonds market or even the stock market, then investors are able to quickly move their funds out of the market if they find alternatives outside of Nigeria that yield better returns. So really, such types of inflows are highly mobile, and you cannot really bank your economy on such inflows. On the other hand, if we can encourage foreign direct investments, where foreign investments actually come and make investments in specific sectors of the economy, be it consumer products, and be it a fintech product or whatever it is, all right, it's much more difficult for foreign investment to just fold up just because we are going through a recession, because they'll have to make projections over a longer period of time and see whether that project is going to be feasible over the medium to long term before they make decisions as to getting out of the economy. So capital flight can be a problem if you are overly dependent on it to stabilize the foreign exchange market. But it obviously helps. Today, if you look at the interest rate on treasury bills, around 6 to 8%, and you have your inflation rate of around 16.8%, clearly there's no incentive to make investments in treasury bills because the real return is actually negative, if you're going to be getting those returns into the future. So clearly that is hurting the inflow through the bonds market, for example. So capital flight is a problem, but it's not huge. The most important thing is to make sure that we become more export-oriented and we diversify away from over-dependence on crude oil exports and make sure that other sectors of the economy are also bringing in some, foreign exchange revenues into the economy.
All right, Dr. Josh Bamfo, would have talked about the agricultural sector, which we see contributes over 24% to the GDP, but its earnings, its contribution to the foreign exchange is really low. But I guess we'll have to do that another time because the time is gone past that. So thank you so much for sharing your thoughts with us this morning. Dr. Josh Bamfo is the head of transfer pricing services at Anderson, Nigeria. He's also an economist. Thank you so much. Enjoy the rest of your day.
Thanks for having me.
So now we'll do an opening call to the market, and we have Will Ebong. Hello, Will.
Hello, Ini. Good morning.
Good morning.
Ini, the equities markets carried on last week's bullish performance. I just have good news all the way as investors' interest in First Bank, which was up about 1.9%, inspired yesterday's gain. We saw that the benchmark index edged higher by 0.05% to close at 40,243.05 points, and the market capitalization is approaching the 21 trillion naira mark after its 14 billion naira gain. That's a wow factor. That's a wow factor. So we now see the month-to-date gain and year-to-date gain loss printing at 0.1% each. However, we said that the total volume of trades dipped by 80.7% to 202.36 million units, while value dropped by 75%. On the flip side, the number of deals rose by 8.4%, and shares of Fidelity Bank and GTCO were the source of investors in terms of volume and the value of top traded stocks. Fidelity Bank contributed 18.95 million units to the total volume, while GTCO boosted the value of trades by 512.41 million naira. But to give us more insight, let's bring in Rotimi Fakayaja, a stockbroker at the NJX. Good morning, Rotimi.
Good morning.
Good morning again. The market seems to have made a U-turn and is on a bull rally. What's driving this?
Well, I think the expectation is so high following the performance of the market. Investors believe and operators believe strongly that there are better times for the equity market. This is what we saw in the half year. So we believe that those results are going to be consolidated. And knowing fully well that after this result, the next we're going to be having is the financial year, audited financial year end, which will come in handy in January and February. So I think investors are really positioning themselves. The good run of the market is currently coming to an end, and we are almost easily bringing to even the year-to-date negative position. Now it's less than about 1% or thereabouts. So, I mean, it's almost negligible for now. So I think investors are really more positive about the market in spite of all. Because there is no, if you invest in the market right now, there can't be any better return in any other financial instrument than the equity market. Because if you buy some shares between now and February next year, you're likely to have a yield as high as about 12%. And that is a lump sum. So investors are actually positioning themselves mentally well that the equities with good fundamentals will sustain their dividend payouts and also the good profit that is turning out over the years.
Oh, that's good. Speaking of positive returns and dividends, we see that the insurance sector makes a comeback after taking a hit last week. We see that they're up about 1.53%. Are penny stocks still the safe haven for investors?
Well, I think insurance stocks still remain viable, and there is still enough of a leeway for them. They've not really exploited up to 5% of their potential market, and I think that is also a future part of the future of the Nigerian economy. So I think investors that are very shrewd and know fully well they want to choose another insurance company will definitely make a good decision by taking off some of them and encouraging the bull in that particular run in that particular sector.
We also saw a 2.0% uptake in the stocks of FCMB. We know that it's not a tier-one bank yet, but does this have anything to do with the recent Fitch rating?
Well, I think there's a lot happening within the bank, and what you just said cannot be taken out of that law. And I think all these definitely will impact positively on that bank as time to come.
On the other hand, Jay's Bank published last Thursday their earnings forecast for the fourth quarter of this year with expected profit after tax of over R1 billion. However, its share price declined yesterday by 5%. What's going on there?
Well, there's really nothing going on until investors get a particular result substantially. They will not be able to take it back. And we also know fully well that the pricing in the market, demand and supply is also part of it. So if for the reason of somebody wanting to sell and there's not enough demand in the market, we are going to see price appreciate this type of oil that will be mastered in the air. So I think it should return and it will stabilize.
Thank you so much, Ruptumi, for your insights on the program. Over to the unlisted markets, where we saw a 0.12% uptick in the NASD Securities Index and the market's cap. Overall volume and value dropped, were declined at the close of trading yesterday, but the Nigerian Exchange Group advanced in yesterday's trading session. Its share price increased by 2.89% to close at 13 naira 55 kobo. So, Yini, I just have good news and bad news, a bit of bad news for the NASD market, but more good news to come. And we hope that the run continues the rest of the week.
Yeah, we do hope so. We do hope so, Will, because, I mean, I'm happy for the banking counter because I think it was 2 weeks ago they were the ones driving the market down, and now they are the ones bringing the market up. Oh. So, I mean, it's congratulations to investors in the banking stocks. All right, well, we'll take a quick break now. When we come back, we'll do an opening call to London. Do stay with us. You're welcome back. We head straight to London now, where Juliana is standing by. Hello, Juliana. Good morning.
Good morning, Innie.
Good morning. A shortage of semiconductors is still persisting, and is this likely to affect the plan to ban fossil fuel-powered cars by 2030 anyway?
Well, absolutely. And this is reflected in the data released by the Society of Motor Manufacturers and Traders, which showed that new car sales in the UK have plunged 35% in September. About 215,000 cars were sold, which may seem like a lot, but it's not. This is the lowest amount that's been sold since 1999. And typically in the month of September, when there's a new plate, so if you've got a lot of cash in your back pocket, this is the time where you would typically buy a new car, but that hasn't happened. In fact, it's old cars that are ranking much higher than new car sales at the moment, and this is all to do with the semiconductor chip shortage. Car manufacturing plants that produce these chips in Malaysia, Taiwan, Singapore, they have been shut down for months due to this shortage. In fact, even some car plants in the UK have had to halt production, and this has really been reflected in the sales. So it's not great, and it doesn't appear to be abating any time soon. But on the flip side, there was some good news because in the month of September, 35,000 electric powered vehicles were sold. This is the most that have been sold, and as you said, this is all going back to the net zero 2050 plan of Boris Johnson's Conservative government. And of course, by 2030, the new sale of petrol and diesel cars will be outlawed. So it's a good thing that these electric vehicles are being sold.
Yeah, so people are actually looking for the alternative, I mean, with lack of these semiconductors. Well, one of the biggest news globally now is the Pandora Papers, and they've mentioned that secret owners of more than 1,500 UK properties are bought using offshore firms. What are some of the reactions to this news?
Well, it's a big story, as you said, not just here in Britain, but across the globe. But I think as it pertains to Britain, you know, there have always been accusations, even from the Nigerian President Muhammadu Buhari, about Britain's shady dealings ever since former Conservative Party leader David Cameron called Nigeria fantastically corrupt. Well, for you know, the world's wealthiest, Britain does appear to be perhaps the safest place to hide your money. That's what you know, investigative journalists who are digging through the Pandora Papers have unveiled. And in fact, 1,500 properties to the tune of about £4 billion have allegedly been purchased in the UK by wealthy individuals who have been hiding their money in offshore accounts. Really important to mention, of course, that doing this isn't illegal, but, of course, it makes investigations more difficult to trace. Who does that money actually belong to? Where has that money come from? So it is a serious issue. Successive governments, including the current Tory government, have said they are going to start cracking down on this and making it more difficult for people to put their earnings into properties. But, of course, they haven't done that recently. There is the Tory government annual conference ongoing in Manchester at the moment, and according to a government spokesperson, they will be addressing the issue when they've got time.
All right. Thank you so much, Juliana. We'll talk to you later at 1:30 during Business Incorporated.
Thank you.
So let's move to the crypto space now, and it falls on me. All crypto markets have been positive for a few days now. So if you're an investor there, then it's good time for you, as the total crypto market capitalization is broken out of the descending channel pattern, indicating some type of trend reversal. The total crypto market volume over the last 24 hours is $105.73 billion, which makes a 19.28 increase. The total volume in DeFi is currently $14.90 billion. That's 14.09% of the total crypto market 24-hour volume. The volume of all stable coins is now $84.44 billion, which is 79.87% of the total crypto market 24-hour volume. Now, let's look at the price of Bitcoin. Now, it's been up 3.63% in the last 20, at about 8:30 a.m. That's now $49,489,000, getting very close to that 50,000 mark. And Bitcoin's dominance is currently 42.99%, and that's an increase of 0.40% over the day. For Ethereum, the price is about was at 8:30 a.m. about 3,391.40, and that's a 1.12 increase in 24 hours, with a 24-hour trading volume of $16.83 billion. We have some gainers, but just before we bring in the gainers, let's have Rume Ofi joining us now to tell us what's driving this bullish sentiment in the market. Hello, Rume. Good morning.
Good morning, Amy.
Yeah. Great. So what's driving these bullish sentiments in the markets?
All right. There's been a lot of sentiment around, and these sentiments are coming into reality. You know, Bitcoin has been humbled around the 35, 33 zone for a while, accumulating and hearing all of the discussions that we'll be having globally. But decided to shoot up. As we're talking, it's about 50K. No, but I think one of the things moving it is the El Salvador story here that we'll be using Volcano to be able to mine Bitcoin. You know, Bitcoin has some concerns from the most using renewable energy, not using renewable energy, and now we're using renewable energy, good one from Volcano, and it's making the market pick up. And one very good thing about this whole thing about El Salvador, if I have a very young president of 40 years, Bukele, that we could use cryptocurrency as a legal tender, which came into operation about on the 7th of September. I think the whole population now using Bitcoin as exchange now in El Salvador has really increased. With a population of 6.5 million, about 3 million users are actually using Bitcoin now for transactions. It's enough because before now, you know, Bitcoin has been seen as something used by criminals, but now it's gaining a huge momentum.
Now it's a legal tender.
It's gaining a huge momentum. And I think one other thing again that I have to point out that is making it go through also is the idea of Bank of America. You know, Bank of America is one of the biggest financial institutions in the world with 56 million users, saying that they are looking forward to get more involved in digital assets, crypto assets, basically. And that is no joke, you know, and that is going to square a lot of things in the future. Not just only Bitcoin, they are looking at the finance part, which is supply chain, then social media, gaming. You know, a lot has happened with NFT, and a lot is still going to happen. They are researching it seriously. They have a research team already, and it's going to make a whole lot of sense. 431 million users exchanging currency and DeFi service. That's what their research team has been able to bring forward, which means that a lot is going to happen in the shortest period of time.
All right, Rume. Well, I'm glad to tell you that even though it was 49 in the morning, I don't know if you can check now. You see that Bitcoin has actually hit the 50,000 mark. Yeah. So this is good news. Do you see this being sustained, especially with all the factors you have?
The resistance is about 5,400, right? So it has moved 60%. just from last week to now, it's going to pull back a bit, for weekends to also leave the market so that some other persons can buy more. That's how the volatility helps some of us to be able to sustain well, if you ask me.
So how long do you see this bullish sentiment being sustained?
The second leg of the bull run has just started.
Okay.
We're going to see till next year, first quarter next year, second quarter. It has just started. This is just the speed of
Remember, that's a long time. You don't see any correction before first quarter next year?
I think this year we're going to see 800 plus, hopefully 800 plus. But we're going to be seeing a bit of correction around the basic correction I'm personally looking at after this 50 is around 45, 30, 45, around 45, 44, going back again to all-time high and above.
All right, Rume. Thank you so much, Rume Ofi, digital market analyst, for joining us this morning and sharing your thoughts. Well, just before we go, let's look at the gainers. Binance Coin lit with a 3.33% gain at $433.99. Cardano is also on the list. It went up 1.33%, costing $2.21. That was this morning. XRP gained almost 2%, while Dogecoin gained almost 10%, and it was costing 23 cents as at about 8:30 this morning. On the flip side, we have USD coin. It shed marginally and is now $1. Solana was $166.46 this morning after shedding 1.39%. Terra shed over 2% and Avalanche over 1.5%. Well, that's it for the program today. Thank you so much for being a part of it. Do remember to join us at 1:30. We'll bring you updates from the world of business again. That will be during Business Incorporated. To join us then. I'm Ini John Mekwa.